Hello, welcome back. We're going to be talking about Amazon today, which has announced a stock split some time ago, and it's actually taking effect today. As you will see, Amazon stock has split and trading begins Monday, so that's basically today. In a few hours when the market opens, we're going to be looking at a different Amazon price. And I wanted to make a video and kind of talk about this, tell you what this means and how you should be treating it as. Now, if we take a look at the stock analysis chart here, you will see that the current price of the stock is about $24.50 here USD. And I opened up an article, one of the stock news articles here, pretty much the one that talks about Amazon stock split. And you will see here some interesting information. Amazon stock has split and trading begins Monday. There's going to be a 20-to-1 split here. And as you'll see, the last price was what we said it is, 2,447. And it's going to open up at about the $122 level this Monday. And so you can kind of see here that investors will receive, the investors that already have been investing in Amazon, what will happen is each of their shares is going to be worth $122, but they're going to receive 19 extra additional shares pretty much for each one they actually already hold. Now, what does that mean for new investors? Is it a good buy opportunity? I have opened up another article here which talks about 3 reasons Amazon stock could soar after its split. And it mentions, for example, that AWS is a beast, for example, which is true. I mean, AWS is really a beast, and its business is booming and keeps growing. Advertising is booming as well for Amazon. And also, the other interesting thing, the stock is cheap because it trades at roughly 20 times projected free operating cash flow. Now, of course, you can find tons of reasons, tons of ways why a stock could be regarded as cheap, but is it really cheap? Now, this is something that we have examined in the past, and we can pretty much quickly do here in this video as well. But before we do that, I wanted to talk a little bit about the stock split, because it is important to understand that a stock split doesn't do anything in terms of the stock price. Now, it could actually bring it up, propel it upwards, because it's a psychological effect among investors, because now they don't have to actually set like $2,500 just to buy a single stock. They could just buy one at $122. So it's more of a sort of like psychological thing, and also a thing that allows investors to buy with less money. So people who cannot really afford to spend that much on a single stock, they will now be able to. Now that has some effect also in options, because options you trade at $100 batches, and so it makes options more viable really by lowering the price. Now this could make the stock more volatile as well. But of course, investors tend to pile in when this kind of event happens. It's almost like a psychological thing, and see, this is why potentially buying this stock right now, even if you have bought it before, actually maybe the end of the previous trading day, could yield some nice trading results. You could have made you some money trading, because it's likely to open up at a higher price today after the stock split. People may actually flock and actually buy more stock because it's actually going to be cheaper. Now, does it affect the market cap? Does a stock split affect the market cap? No, not at all. The market cap will be exactly the same when the stock market opens, because remember that the market cap is the amount of outstanding shares multiplied by the amount of multiplied by the price, pretty much. And so as the price goes to $122, now we're going to be having more outstanding shares by a factor of 20, pretty much. And so you're going to be seeing a much higher outstanding shares count here, really. And this is how it's going to affect Amazon, pretty much. This is how the market cap is going to be affected, pretty much remaining steady. It's not going to change at all, because there is pretty much accounting for the outstanding shares as well as the price. But as an investor who is potentially looking to buy this, you shouldn't be too much affected by the stock split. Again, this is good for traders, but not for investors necessarily, because we have taken a look at Amazon, and it seems to be expected to be actually kinda expensive still. And it is a company that has been paying a lot in terms of expansion for actual capital expenditures, and this is why their free cash flow is in the negative in the last year, for example. Of course, this kind of free cash flow results here do not affect our projections at all, really, using the discounted cash flow model. We can still use a revenue growth that makes sense, for example, like 10, 12, and 14%. A net income margin that also makes sense based on what the company has been doing, maybe 4, 5, and 6. And a free cash flow margin that's going to be typical. Now, we cannot really take these results because free cash flow margin has been affected by the operations of the company, but we can go with something that makes sense, 80, 90, and 100 here, and an annual return of 13% that is typical for what I want to be making out of my stocks. And if we hit calculate here, you will notice that the Amazon price is actually expensive. The stock price is expensive for what the stock really does in terms of its financials. And that is not going to change after the stock price changes at all. And so you have to bear that in mind. The fact that there is a stock split doesn't affect anything. And still, the company is expensive based on its free cash flow generation for the upcoming 5 years, and based on this kind of projections here. We would typically want to get this stock probably near $1,000 or so, and this is why I do not agree with this article here talking about just the operating cash flow, for example. Although it does make sense, it does make sense as a factor, really, that they are looking at the operating cash flow. But what I want to look at is not just the operating cash flow, it's how the net income translates to free cash flow after we factor in all the projections here, like the revenue growth and net income margins as well. These are very, very important, because just because you have operating cash flow doesn't mean you get enough free cash flow to make sense for what your company is doing in terms of its profitability. And so using a discounted cash flow model will be much, much more precise in your results. Now, that's what I wanted to talk about in this video. We are expected to see an increase in the stock price. I wouldn't be surprised if that happens. More than likely it will happen, I would assume. And again, if you are looking to trade this one, it may be an interesting opportunity, but buying for the long term, you may have to rethink it and kind of run through the simulation here, see what you should be getting out of Amazon in terms of its stock price. But thank you for watching this video. If you like this one, please leave a like and remember to subscribe. And also, you can get access to this tool here that I'm using in my videos by becoming a patron. You can find links in the description box below this video. Thank you for watching again. I'll see you when the market opens, maybe even earlier, because I'm preparing to make some more videos. And see you soon, guys. Bye-bye.